Hi everybody, it's time for the latest investment market update. I'm here again with James Timpson. James, it doesn't seem so long ago since we last spoke. How have things been through February?
Yeah, well, the big event, of course, is the ongoing conflict in Ukraine. So global markets have been a bit shaken by that. I think in particular European equities, obviously because this is happening in Eastern Europe, European stocks fallen nearly 6% in the month. So they've been among the worst hit. In comparison, US equities are down 3%, according to the S&P 500. But UK large cap companies have actually done okay for the second month in a row. Whilst most markets are down, the FTSE 100 is actually up for the month. And I think that's largely due to many of the larger companies in that index being highly correlated to oil. So Royal Dutch Shell, for instance, is the largest company in the FTSE 100. And because oil's done so well lately, it surpassed $100 a barrel for the first time in around 8 years last week. Because that's done so well, FTSE 100's been quite resilient. The big casualty is, of course, Russian equities. So the MOEX index, which measures Russian stocks, that was down around 30% for the month before the Russian stock exchange closed last Friday, and it's been closed since. So we're not sure when that's going to open. And obviously with volatility quite high at the moment, the VIX index is quite high. That's a measure of the implied volatility that investors expect to see. That's currently at its highest level since about a year ago. So yeah, there's been plenty of volatility in markets lately.
We understand from Gary's recent commentary that the Courtiers funds have been quite defensive. Are you comfortable with the performance of those throughout February and looking into the near future?
Yeah, so leading up to the invasion, I mentioned in last month's commentary that stocks which have been doing quite badly over the last couple of months are big tech stocks or growth stocks. And because we've been largely avoiding those, our funds have been quite resilient. And that's continued throughout February. So whilst the market as a whole is down just under 3%, our growth fund was only down just under 2% for the month. And similarly, the cautious fund was down just over 1%. So we're really pleased with how defensive the funds have been, and that's largely due to the amount of diversification we have in there. So even though we do have some exposure to European equities, that forms just a small part of the overall portfolio, which consists of broad exposure to things like the UK and the US. We've actually been quite overweight the UK, which has also helped us, given that the UK has been quite defensive. And also a variety of individual stocks, which we've chosen based on their value characteristics.
Thanks, James. Normally at this point to close, I'd ask what you foresee for the month ahead, but I think with the uncertainty that we are experiencing at the moment, it's fair to say that you're sitting tight where you are, and we're going to see how the next few weeks unfold.
That's right, Leo.
Well, then we shall leave it there, James, and I'll look forward to catching up with you again next month. To our viewers, thank you very much. If you've got any questions, please let me know, and we'll make sure that we get those to the right people. Thanks.